In our daily communications to our investors and subscribers, we try to speak real estate in normal language. However, we know that sometimes real estate jargon can slip through the cracks, leaving some people pretty damn confused. I'm Dan Cosgrove, the CMO of Anthem Capital, and today we're going to share the most important definitions to understand for real estate investing. And don't worry, you don't have to take any notes. If you just head over to our website, you can download our ebook that has all this information as well as several other educational readings that will help you learn more about the wonderful world of real estate investing. So without further ado, here are the 8 key terms to know for real estate investing. Number 1, average annualized return. An average annualized return is the average amount of money earned by an investment each year over a given time period. So when a group tells us their average annualized return in their deal is 25%, it does not mean that they make a total return of 25% on each deal, but a 25% return every year over the course of that investment. That leads us to number 2, total return. So total return is the cousin of average annualized return. Total return is the combination of both price appreciation of the asset you are selling along with the cash flow received during the holding period of that investment period. Those two factors combine to give you a total return. For example, let's say you have an investment that brought you that you bought for $1 million and you held for 5 years. This investment in years 1 through 5 gave you a cash distribution of roughly 8% a year, and 8% times 5 years means 40%. But then at the end of year 5, you sell your $1 million asset for $1.5 million, and you make 50% from the appreciation of that asset. Now you can take that 40% cash flow you earned during the holding years, plus the 50% from the appreciation of that asset to get a total return of 90%. Total return is similar to our next term, which is equity multiple. In our line of real estate investing, equity multiple is defined as the total cash distributions received from an investment divided by the total equity invested. What that means to you as investors, how much you can expect to make off your original invested. So once again, let's do another example. If you're in an investment that says it's a 2x equity multiple, that means it is projecting to double your money. However, don't forget to look at the time it will take to get to that equity multiple. A project that projects a 2x equity multiple over a 20-year hold would not be a good investment. But a project that projects a 2x equity multiple over 5 years, that'd be a great investment. So the next term I want to share with you is IRR. Similar but different to average annualized return is the internal rate of return, or IRR. IRR is the combination of both profit and time into a single metric. Although profit is easy to figure out, the time value of money is not as easy to determine, given it is driven by inflation, and inflation is pretty damn rampant right now. However, the key thing to remember is that $1 today is worth more than $1 tomorrow. So the more profit you can experience sooner rather than later will ultimately increase your IRR. A risk-averse investor might look for a 10% IRR, whereas a more high-risk investor might only want 20+% IRRs. At Anthem, we focus on delivering right around a 15% IRR on all of our investment opportunities. So next we have cap rate. Also known as capitalization rates are measures used to eliminate and compare the rates of return on multiple investment opportunities. You calculate the cap rate by dividing the net operating income, or NOI, by the property's original asset value. If you Google what is a good cap rate in real estate, it will probably tell you somewhere between 5 and 10%, with 5% being less risky and 10% being more risky. However, in today's current economic conditions, cap rates continue to compress, and finding an investment complex or investment opportunity at an apartment complex, even trading at a 5% cap rate, is very low likelihood, with most investments being acquired in the 3 to 4% range now. The next term is NOI. NOI means net operating income, and it's a calculation used to figure out the profitability of an asset. NOI is all the revenue from the property minus vacancy, taxes, insurance, maintenance, and other OPEX related expenses. NOI does not include your mortgage payment, one-time capital expenditures, and depreciation expenses. For real estate investors, increasing your NOI will help drive up your asset sale price. Next is the term multifamily. For the sake of simplicity, when we say multifamily, we mean apartment complexes. Multifamily can be anything from a 2-unit duplex to a 1,000-unit apartment building. In our line of real estate investing, we are only looking to invest in apartment complexes of 60 plus units to give us scalable advantages. So just think about it this way. When you hear people say multifamily, it's really apartment complexes, at least in what our line of work is. And then the final term that's important for you as an investor is 506B and 506C. These are two terms and they're investment classifications defined by the SEC. The differences are pretty small between 506B and 506C, but a 506B allows for some investors to be as sophisticated but not accredited investors, whereas a 506C requires all investors to be accredited and be verified via additional measures. Additionally, a 506B deal can only be offered through a private network of pre-existing relationships, where a 506C can be advertised to the general public on platforms such as Twitter, LinkedIn, Facebook, Instagram, etc. So thanks for watching How to Speak Real Estate Investing Fluently with these 8 terms. If you want to learn more about real estate investing, such as the top 10 reasons to invest in real estate, the 3 keys to look for as a passive investor before investing, or the 5 watchouts in real estate investing, and a lot more, you can follow us here. Visit us at anthemcp.com by scanning this QR code or clicking the link below to get access to all the content we've created to help everyday investors just like you.